I want to address an important topic, and how do you file taxes for a prior year? And so here are the steps I really want you to pay attention to. The thing is that filing a previous year's tax return is a lot like filing an on-time return with a few key differences. And so here are the steps I want you to follow right now. First of all, you want to gather your tax documents. I mean, before you do anything, you want to gather all relevant documents and records for the tax year in question. If it's 2022, 2021, 2020, whatever it is, you got to really have the relevant document. So we're talking about copies of your last filed tax return, your employer identification number or social security number. So if you're a business, so we're talking about EIN. If you are an individual, if you are filing as an individual, you got to have your social. Financial statements. So we're talking about balance sheet and income statement. In some cases, basically, you might want to think also about your cash flow statements. And if you don't have financial statements because your bookkeeping is not up to date, it's you can actually see you can try to see your paperwork from your electronic statements, your credit card statements, your bank statements, and so on and so forth. Okay, it's one of those things where you are able to you'll be able to record and categorize all transactions from your receipts, invoices, and bank statement and credit cards. Okay, and so this is kind of cool. And if you're missing information such as W-2s, 1099s, and other tax forms, you can actually request a wage and income transcript from the IRS. This is totally possible, not a problem. So this transcript shows all of the info reported to the IRS on your behalf for that tax year. Again, everything relates to a specific tax year, okay? So that's the first step. Second step is you need to complete the right tax forms. So IRS forms change from year to year, so you need to make sure you use the forms for the tax year you need to file. If you use online tax software to file a return, make sure that you select the correct year in the software. This is kind of important. And it's one of those things where you can either use tax software or you can just go through a tax preparer. You can actually go through a CPA or an enrolled agent or a tax attorney, depending how complex your return for that tax year is, and just outsource the preparation of that return to a professional. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. The next thing you need to do here is to mail or electronically file your completed return. Okay. Now, if you use online tax software or work with a tax professional, you may be able to file a late tax return electronically, and that's really the preferred method. The IRS modernized e-file, the MEF system, allows authorized e-file providers to e-file returns for the current year and two previous tax years. Okay, so in 2023, for instance, you can e-file for the 2022 and the 2021 tax years. Just keep in mind, though, that e-filing is not available during the IRS annual maintenance period, which runs from late November until mid-January each year. So every year they have two months where they actually do a lot of maintenance, a lot of backup preservation, data preservation, and so on and so forth. Now, what I want to say here is that if for any reason you can't e-file back tax returns, you need to mail them to the IRS, print out the forms, and mail them to the address listed in the form's instructions. So mailing addresses can also change from time to time, so be sure that you get the address from the instructions for the right tax year. The next thing you want to do is you want to pay the tax due or get your tax refund. So you can actually pay the tax owed plus penalties and interest, of course, via the electronic federal tax payment system, the EFTPS rather. And you also have IRS direct pay or just by mailing a check with your return. Okay, you can also request an IRS payment plan if you can't afford to pay the balance due. So you have flexibility. So file your return sooner instead of later if you're expecting a refund instead of a tax bill. In most cases, you only have 3 years from the original due date of your return to file a return and claim your refund. If you file after that 3-year window closes, the IRS will not issue a refund or apply any overpayments to another tax year. So as long as you file within that window, the IRS should really issue your refund via check or direct deposit, not a problem. Now, direct deposit, in our view, is always the fastest way to get a refund. But you can ask the IRS to apply your refund to the following tax year if you expect to owe money down the road. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about how and why to file taxes for a previous year. Now, let me give you the approach you need to really pay attention to. So, why do you need to file taxes for a previous year? And so, for most people, filing back taxes is not optional. It is required by law, right? While some people don't have to file tax returns because they didn't make enough money, most do. In fact, the threshold for filing for self-employed workers is lower than most, since you have to file a return if you have self-employment income of $400 or more. And so, if you're not sure whether you need to file, you need to check out the IRS's Do I Need to File a Tax Return interactive tool. So there is a tool on the IRS website where you can actually check whether or not you should be filing. Now, other reasons you may need to get caught up on your tax filing options, your tax filing obligations include limiting IRS penalties and interest, getting approved for a loan, or avoiding criminal penalties. Let me really sort of elaborate a little bit so you have a clear idea. So, limiting IRS penalties and interest. So the IRS charges interest and penalties from the date your taxes were due until you pay them. So filing and paying the tax you owe limits the amount you'll have to pay ultimately. And getting approved for a loan. Lenders may require you to file past due returns before approving your mortgage or business loan application. And a lot of lenders, as a matter of fact, they want to make sure that you are in compliance with the law. That's why they do it. Okay, and sometimes when you apply for a line of credit, they might still ask you that for the same. They might still ask you for your tax returns for the last 3 years, by the way. And there are other reasons like avoiding criminal penalties. So under Internal Revenue Code IRC 77201, willful evasion of taxes is punishable by up to 5 years in prison and $250,000 in fines. So while the IRS generally won't go after you for criminal tax evasion, if you simply got behind on your tax filing due to a death in the family, illness, or another circumstance beyond your control, they're not as lenient if you simply avoided filing to get out of paying the amount you owe. So it's one of those things where the agency just wants to make sure that you pay your taxes as millions of Americans do every single year. So bottom line is that if you can't pay, at least trying to make a gesture, request a payment plan or something. But you need to actually don't ghost them. If you ghost them, you are in trouble. There are other reasons, such as starting the statute of limitations, for instance, keeping your passports, avoiding tax levies and liens. So when we talk about starting the statute of limitations, basically what happens here is that the IRS generally has 3 years from the date you file your return to audit your return and assess additional taxes. Okay, 3 years. However, that statute of limitations doesn't start until you file your return. So filing your tax return starts the clock, so you don't have to worry about the IRS asking questions about your return 5, 10, or 15 years down the line. Okay. Also, keeping your passport, because if you have seriously delinquent tax debt, the IRS can alert the State Department, and when this happens, the State Department can deny your passport application or revoke your current passport. So filing your returns and paying the tax you owe ensures that you get to hold on to your passport. And what about avoiding tax levies and liens? Well, the federal government has more collection tools than the average creditor. So if you neglect your tax liability and ignore the IRS's attempt to make payments arrangements, the IRS can place a levy or lien on your assets. And so what is a levy really? So a levy is a legal seizing of your property to settle a debt. So the IRS can levy your bank accounts, financial accounts, paychecks, vehicles, real estate, and other property. A lien is a legal document alerting other creditors that the IRS has a claim against your property. And what happens here is that the IRS can place a lien on your home or other real estate, making it hard to sell or refinance the property. By the way, boss, I want to quickly remind you of today's topic. But before I remind you of today's topic, I just want to say that when we talk about all the reasons why you want to file your tax return, it's important to understand that the most important here is limiting IRS penalties and interest, and also avoiding tax levies and liens. Okay, I mean, all of those reasons that I just listed to you, they're important. But the most damaging, at least in the short term, or you want to limit IRS penalties and interest, and you also want to avoid tax levies and liens, because if the IRS garnishes your paycheck, you are toast, right? You are in deep trouble, so to speak. Okay, now let me just remind you of today's topic. We are having a conversation about how and why to file taxes for a previous year. Let me give you a few pro tips here. So what happens if you don't file? Well, you can imagine what will happen. But the thing here is that the consequences are far dire. I mean, they're really dire here. So if you don't file a tax return, the IRS may file one for you, which you don't want anyway, because this might sound convenient, but an IRS filed return likely will not work out in your favor. When the IRS files for you, it's known as a schedule, it's basically known as a substitute for return, SFR. The problem with an SFR is that the IRS uses the information it has available, which is primarily related to your income, such as your W-2s and 1099s. The IRS typically doesn't have information about, let's say, deductible business expenses, charitable donations, and other tax write-offs, so those are not included on your SFR. As a result, it's almost guaranteed that you will owe more with an SFR than you would if you filed a return that includes all of your available deductions and tax credits, okay? Plus, the longer you go without filing, the more your interest and penalties will pile up, which you don't want anyway, because those penalties can include failure to file penalty and failure to pay penalty. Those are the biggies. Those are the two big penalties you do not want to have. So the failure to file penalty, this penalty is actually 5% of your unpaid taxes for each month or part of a month that your return is late, capped at 25% of your unpaid balance. And then you have a failure to pay penalty. So this penalty is 0.5% of your unpaid taxes for each month or part of a month that your tax liability remains unpaid. If both the failure to file and failure to pay penalties apply to the same month, the IRS will apply a combined penalty of 5%. And if your tax return is more than 60 days late, the minimum failure to file penalty is $435 or 100% of the tax due, whichever is less. And so keep in mind, though, that the IRS also charges interest on those penalties. So the higher your penalties, the higher your interest will be as well. So it's one of those things where you are just in a very difficult situation, and which this is the reason why you just want to pay your taxes as soon as possible. Let's dig a little deeper here, and let's talk about what will happen if you can't pay previous year's taxes, okay? Now, don't let the fact that you can't afford to pay your tax bill keep you from filing your tax return. So depending on how many years you have to catch up on, you have different IRS requirements that you should know about. So if you're 3 years behind, for example, the good news is that you get caught up quickly. Skipping a few years may not have a significant financial impact on your business. If you find yourself 5 or 10 years behind, the situation is a bit more complicated, and this is where it's just better to go with the tax professional. It can be an EA, a CPA, or a tax attorney. Okay, if you're 5 years behind on your taxes, for each month your return has not been filed, a 5% failure to file penalty is added to your tax debt. Meanwhile, if you haven't filed taxes for 10 years, in addition to missing out on possible tax refunds, there are several areas of your life that require you to present your recent income tax returns. And if you haven't filed your taxes recently, you won't have any tax returns to present, okay? And you may be asked to show your recent tax returns when you apply for a passport, for instance, and you'll almost certainly be asked for tax returns when you apply for a mortgage, rent, or other loan. You may also be asked for your recent tax returns when you apply for health insurance, okay? So the IRS has several options that can make getting caught up on your back taxes affordable, including you have penalty waivers, you have payment plans, you have others. But I want to first talk to you about the penalty waivers. So the IRS considers waiving penalties for two reasons. So you have reasonable cause, and then you have first-time penalties. So if you didn't file on time due to extenuating circumstances, such as fire or natural disaster, death of an immediate family member, or illness, the IRS may agree to waive the penalties. Okay, that's for a reasonable cause. What about first-time penalties? Well, if you're normally on top of your tax filing responsibilities, and let's say you just fell behind this year, the IRS may grant you the one-time courtesy of removing your penalties. So to ask the IRS to waive your penalties, call them at 1-800-829-1040, 1-800-829-1040, or the phone number on your IRS bill if you have one. The IRS doesn't waive interest, but getting penalties waived can drastically cut the amount you have to pay. So it's one of those things where you have to think about what really works for you. Okay, it's yeah, it is what it is. So besides basically penalty waivers, you also have payment plans. And so the IRS offers two types of payment plans that can make paying your back taxes more affordable. So you have a short-term payment plan, and then you have a long-term payment plan. So for the short-term payment plan, basically if you can pay the amount you owe within 180 days, the IRS doesn't charge a setup fee for a short-term payment plan. You can actually pay the amount you owe via IRS direct pay or by check, money order, debit, or credit card. So you have several payment plans, several payment means rather. And so besides short-term payment plan, you also have a long-term payment plan. So if you need more time to pay, you can request a long-term payment plan. So for this type of plan, you tell the IRS how much you can afford to pay each month, and the IRS either approves or denies your request. And the IRS charges a setup fee ranging from $31 to $130, depending on whether you agree to have monthly installments deducted automatically from your checking account or pay via another method. Okay, so this is kind of important. So you can apply actually for an installment agreement online or by calling the IRS at the number that I just gave you earlier. Okay. And you also have an offer and compromise, an OIC. So this is another option where you can actually, create some kind of serenity in your life. Okay. So an offer and compromise really is an option the IRS provides to people who can't pay their tax debt without causing themselves economic hardship. So with an OIC, the IRS agrees to settle your debt for less than the full balance due. But this option is not available to anyone. So available to everyone rather. So to apply for an OIC, you have to meet specific eligibility requirements, complete an application, pay an application fee, and submit documents proving the assets, debts, and income shown on your application. You can find actual instruction by going to the IRS's website and have a clear conversation there. So the completing the OIC application and negotiating the offer amount with the IRS is complicated. So it's best to get help from a professional, I would say an experienced tax professional who can really help you here in terms of negotiating your OIC offer with the IRS. Thank you so much for your attention. I really appreciate it. Let me quickly do a recap here. So in today's conversation, I just spoke to you about how and why to file taxes for a previous year. So I give you the steps, the approach, the pro tips, and finally, the recap. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.